Hello, everybody. How are you? Good morning in America, good afternoon in Europe, and good night, I guess, in Asia. Good morning, Valeria from Buenos Aires, and good morning, Yohay in Barcelona. How are you guys?
Hi.
Mauricio.
Hello. Everything's fine here.
Yeah,
Cool.
happy Friday.
Yeah,
Yeah.
happy Friday, finally. We are in
Yeah.
Friday.
That's been a long week.
Yeah, and the next week will be harder too. Will
I
be
know. I know.
So we are here talking about the US GDP. So what we can expect today? Well, firstly, before that, Yohei, can you explain us what the GDP is?
Well, it's sort of all the output of the economy, everything. How much is the economy worth? Basically, it's a sum up of consumption, what people buy. It's the biggest part in the United States. Investment, government spending, and then you add also exports and subtract imports. And of course, we aren't interested in the actual number, which is something like 16, 17 trillion, but in the growth rate. In the US, it's annualized, and today we're expecting 2.6 after 1.1 in Q1. We now get the data for Q2. The first release for Q2, and it's important because the first release has the biggest market impact.
Yeah, and we will see some revisions from the last year, right? In the last quarter and the last years.
Yeah, this could make things more confusing. Add some action to the mix. Yeah.
Okay, thank you, Yohei. Valeria, what are the expectations for the market? What we can expect?
Well, the market is expecting a really big number. Honestly, I believe that 2.6. It's interesting. That will, of course, signal that the U.S. economy is growing faster, right? After the slowdown we saw by the end of 2015 and the beginning of this year. I do believe that the 2.6 will confirm, in fact, the figures that we have been getting from different macroeconomic readings all through this past couple of months. And I don't know, the market will rate us as higher chances or higher odds of the Fed moving rates sooner, sort of speaking, because actually, and despite the Fed has been quite hawkish in this week meeting, there is no real sign that they could move rates in September or December or anytime this year, right? For the most, market odds are placed in the second half of 2017, and maybe a really strong outstanding number today can put them a bit ahead, probably in the first or second quarters of 2017, but still doesn't seem enough to convince us that the Fed will act.
Okay, it's hearing some sound, I think, from you, your side, Valeria.
No, it's not coming from me.
Okay, so Yohei. Okay, anyway, uh, let's talk about the charts. I haven't seen that the euro dollar is rallying right now. It's just trying to catch the previous highs
Well,
around. Let me check. Yeah.
rally is a way of speaking. We are 40,
Yeah,
40
but it's just testing the height of 1120. So what is your take?
but it has advanced 20, no, sorry, 40 pips from yesterday's Wall Street close. It's testing indeed yesterday's high, which is 1120 as major static resistance. But still, if you take a look at bigger time frames, we are still trapped in the range established post Brexit, right? Really nothing serious is advanced in euro. I have said plenty of times that the post-Brexit highs, it's 111.89. We have an 86, so 11.90 is the key for me. As long as it meets below that level, it's not telling me much. That said, if the reading today is disappointing and we have negative reviews to previous numbers, maybe the pair can reach this price zone. I'm not seeing a real break above it, mostly because I don't see any reason why the euro should strengthen, right? We had earlier today European GDP, right? The euro area grew by 0.3% in the second quarter. It was in line with market expectations, but half the first quarter, and really there are no serious signs of improvement in the euro area, which means that I don't know, if I have to sell the greenback, I would sell it against other currencies. You know what I mean? Not betting much on the euro these days.
Okay. Do you have anything to add? Hey?
I didn't hear you properly. Sorry. What do you say?
Yeah.
No, about your height. I'm
Ah,
hearing also some echo. I don't know from.
Yeah, I also hear it. Anyway, regarding the euro, yeah, it's been a very frustrating range, as Valeria said, since Brexit. We're 5 weeks post-Brexit, still the same range. Well, the Fed didn't give us a hint for a rate hike, and today's some figures, at least inflation, came out somewhat better than expected. So you can tie the recent rise of euro dollar to this beat on inflation, but it's mostly, well, moving up in range, some dollar weakness, nothing to get us really excited. I think we were last week we had Mario Draghi, president of the ECB. He managed to not to rock the boat, keep things very stable, and yeah, hopefully maybe this GDP report, maybe the stress tests, which come out just as markets close tonight,
yeah.
will move the euro, something.
Yeah, what do we expect from the stress test?
I have not much expectation from that. The
You
only
know,
thing I would like to see is what information that stress test, sorry, brings about your Italian banks. You know, I guess everyone will be looking for the same, the health of the Italian banks and the possibility of a banking collapse in Italy now, which will add to the bearish case in the euro, right? Brexit, Greece,
There are
Portugal.
also problems in Deutsche Bank and other institutions, but in the past we learned that these stress tests didn't tell us something we didn't know,
Yeah,
and they didn't really expose the problems ahead of time. The biggest case was, of course, in 2010 with they said the stress tests told us that the Irish banks were okay, and 3 months later they
yeah,
collapsed. So
yeah, that's right.
pretty much like expectations for the Bank of Japan acting, sort of.
yeah,
Okay, we are expecting too much from that stress test.
yeah. But if you mentioned the Bank of Japan, at least we had some action here on the charts, right?
Yeah, because they didn't act as we expected, right? You know, the central bank was really expected. Bank of Japan was expected to give us something to work with and provide massive stimulus after a won elections a couple of weeks ago. And the fact is that the bank left the rates unchanged at minus 0.10%. They expanded their lending program in dollars up to 24 billion, I do believe, but and increased the exchange trade funds purchases, right, and almost doubled them. But honestly, it was very below market expectations. Okay, they have made us believe that we're going to come with massive stimulus, massive fiscal and economic policies, and here we are. I do believe that part of the dollar weakness we are seeing against the euro today is thanks to the Japanese yen strength, right? Not much more. If you take a look at the pound, it's unchanged. The Aussie and the CAD are doing little because pressured by commodities. And the Swiss franc, it's a nice. I would like to dedicate a minute to the Swiss franc because over the past few days, the dollar Swissy had been rising to fresh highs, right? And we were all thinking about speculation being behind this move, and we are probably right. And what we get here is that after all of that effort from the central bank, it took just a negative Fed outcome. Not that the Fed was negative, but the market rate negative. To see the Swiss regaining all the ground lost post-intervention, post whatever the bank was doing, and even extending higher, right? And That's a clear indication of how worthless sometimes central banks can be when they decide to intervene in the market, right? That's a sign of how the trend or the currency strength or speculative interest is always above central banks. I don't know, it's a nice case for study, you know, guys?
Yeah, the S&P was punished.
Yeah, yeah. Intervention, quiet intervention, as the Switzerland National Bank does, not a good idea. But they don't learn the lesson. They keep on doing it.
Yeah, some banks are more committed to learn the lesson, like Yohay. They never learn, you know. Okay, Valeria, I am getting from echo from you. Well, right now, not okay. It's okay. So let's move on. What about the cable? What do you think about the cable, Valeria?
Nothing. It's dead. It's dead. The pound dollar has died. And there we are. Take a look at the 4-hour charts. Here is stacking range. In the forward charts, I can see it moving back and forth around a flat 20 simple moving average. Technical indicators have no directional strength. The fact is that I do believe that the pair will remain this way until we have the Bank of England meeting. I do believe it's next week, right? Pretty
Yes.
fast. Yeah, only 3 weeks. Yeah, only 3 weeks from the previous one. Anyway, the market is on hold in despair and hoping again for massive stimulus coming from the Bank of England this time. Let's see what they provide and how the market take it. But I can see nothing in here, you know. The big range, it's 33.20, 30. I do believe that we will remain, hopefully we will move in between this level. I do believe that 30.50, 32.50 is now the comfort zone, and there's nothing to do but play those extremes.
This chart just remind me like the Euro Swiss franc the 2 years ago when it was like a big jump and then a floor and then a kind of street swing trading just in a small range. Yeah, you know, do you remember that chart, Valeria?
Yeah.
Yeah. Okay, let's talk about the Bank of England, Yohay. What we can expect next week from them?
Well, first let me come out to defend the pound. Well, it's very boring now, I agree, but it had so many strong moves around Brexit and also until last week, so I think it can take a vacation. The British Parliament is now on vacation, so I guess the pound follows. Regarding the Bank of England, they promised us, basically in the previous rate decision just 3 weeks ago, they're going to do something. What's on the cards? Rate cut of 25 basis points from 0.5% to 0.25, the first move since March 2009. They can also add QE. There's speculation about 50 billion more in QE. They can also change parts of their program, the funding for lending, buying more corporate bonds, things like that. And they can do something in coordination with the government. Now, there were doubts that they would act in general, but after the recent PMIs last Friday, it became certain that they will act because one of the members, Martin Wheel, that spoke out against action or was skeptical, he now changed his mind. So I believe they will act. I'm not sure what they will do. Perhaps there will be a buy the rumor, sell the fact. They'll do a little bit. Markets will remain hungry, as markets are always, and we'll see the pound rising. But I'm sure they will act. I don't see a chance, at least not now, of a surprise. Another thing we should note is that before the Bank of England's decision on Thursday, August 4th, we have the final PMIs. Okay, we had the special preliminary release. Now we'll have the final PMIs. So this could also shape expectations a bit more. Perhaps the terrible services PMI, the largest sector, perhaps we'll see it bounce just a bit back up. So maybe it will not. Maybe the pound will rise before the release, and then when the Bank of England does provide stimulus, the pound will still fall. So it does depend a bit. Also, I mean, the services PMI has another chance to make its impact on the pound. In any case, I believe that after this very boring week with the pound, next week will be much, much more interesting.
A bit more interesting. Yeah, indeed. I agree with that.
Yeah, I just read that the GDP of the England and the industrial production was really high. Well, not really high, but it was good, just ahead of the Brexit referendum, and then after that it was just collapsing.
Yeah.
You know.
Yeah, business surveys shows that things became a bit more worrisome in July, but yeah, that's true. I'll just add that the Q2, first of all, most of it was pre-Brexit, and we only have the first release, which is based on the data early in the quarter. So,
Okay.
yeah.
Okay. So Valeria, what are the most important pairs right now? You know, in terms of volatility, in terms of movement, when we can see the most shocking movement after the GDP.
I do believe that the first one will be the dollar Japanese yen because it's already in motion, right? If we had a terrible number, the pair can go to that low around 102.60 and get back closer to the 100 level. If the number, on the other hand, it's we have positive surprises, the recovery can extend up to 104. That's what I'm thinking. I do believe that here we will see more action, but of course it will depend, right? If we have a strong remark after the event, the weakest currencies these days are probably the pound and the Canadian dollar. So probably there is where we should place our bets. But the stronger seems to be the Japanese yen, right? And the euro is trying to be strong. So if we have to go against the greenback, probably the dollar Japanese yen will be the first choice. And maybe the euro the second for a few, up to 11.90 or so.
Okay. What do you think, Yohay?
About euro dollar. Well,
Actually, we have data in Canada. Also,
right.
yeah, we have industrial production and
Yeah.
also the GDP, the monthly GDP. So, what we can expect from Canada and what we can expect from the dollar, the Canadian dollar, facing the.
Dollar CAD will move mostly on US GDP because it's the first release in the United States, and in Canada it's a monthly release, and it's for the month of May, in the middle of the quarter, so not the most important GDP release. But anyway, what's expected there, figures that I have, is a drop of 0.4 month over month. Again, not quarter over quarter, not annualized, and yeah, and the previous month in April it was plus 0.1. Yeah, it should impact, but I think we talked about this earlier this week. Dollar CAD has been moving with the oil prices quite a bit. So, and again, this is not the most important GDP release from Canada. Anyway, lines that I'm looking at, 132.40 and 130 on the downside. This is sort of the big range.
Yeah. I would dare to say that oil will have more to say about dollar Canadian than any number coming from Canada.
Okay, so we are 2 minutes to go, and it is quiet. There is summer here, so it's not too crowded, right?
Yeah.
The
Well,
volume is low.
yeah. But well, it is what it is. I guess.
Yeah.
I believe that we're going to get some action next week because besides Bank of Japan, we have American payrolls. I do believe that we have also something coming from the Reserve Bank of Australia, right? So it will be an interesting week. But after that, we may have a couple of weeks of boring range
Yeah. Well, the move could be violent, you know.
Yeah, when we have smaller volumes in the market, movements tends to be wider.
Yeah, I'll mention that last August we had lots of action. The Chinese stock market crashed, so August is not necessarily a quiet period. We think it's quiet, but we can have big surprises.
Yeah, exactly.
Okay, 1 minute to go. I'm gonna type the numbers in the chat. If you say it on live here in the video.
Yeah, we're expecting 2.6, and that's the headline figure. We'll then talk about details, but that's the most important thing, of course.
Remember, we always have a bit of delay. You'll hear the resulting charts first.
Tick tock, tick tock.
10.
I love when they get nervous like this a couple of seconds before the report. Beep, 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 beep.
The big disappointment, only 1.2. 1.2.
1.2.
Oh, less than half than expected. We also reacted first, or stronger. Gold could be a good bet also today because this is putting further away the possibility of a rate hike in the US.
Yeah, bad news is good news for gold at least.
Yeah.
Yeah,
The rest of the market is showing the worst reaction ever. My God.
Yeah, maybe the details look a bit better. The details that I have, we have a surprise in the deflator. That means 2.2 instead of 1.8. That means that maybe lower growth is partially to blame on higher prices. But the PC, sorry.
Sorry, no, I was saying Canadian GDP was even worse than expected. But
yeah, well below expectations.
Yeah, so slightly weaker dollar on the big disappointment.
Yeah, commodity currencies are taking all the advantage. And the franc.
Yeah, the franc woke up.
It's a bit overextended, but there are no signs that it will change PS. The Japanese yen approaches to 103. If the level give up, then it could retest the lows. Do we have more data coming later today in the US?
In the US?
Yeah, Michigan sentiment and Chicago PMI.
It's the final read of the sentiment, so it's not that important.
Yeah, okay.
Okay, there is no. Well, okay, some details. Personal consumption is up 4.2% annualized. So what's pulling it down? Sales, GDP sales are only up 2.4 and was an expectation for 3.2.
Big revisions?
Yeah.
Good revisions or bad revisions?
Bad.
Bad.
Big bad revisions. Yeah, the last month from...
Okay, so goodbye dollar, right?
Yeah, was from 1.1 revised to 0.8.
Previous, okay.
Yeah, you know?
Previous quarter GDP.
Uh-huh.
Good news for gold and good news for Trump.
Yeah.
Yeah.
Okay, the euro has broken above the previous high.
Yay!
And since yeah, 15 pips. But still, there is not much in here until the 60-90 region. So if it holds above that 20, it can keep on rallying.
Yeah, 111.90 we're looking, right?
The post-Brexit high. Oh gosh.
It's quite a shocker, but
It's holiday around the world that I didn't knew.
what?
I'm thinking if it's a holiday I'm not aware of.
It's the beginning of holiday season, just almost August.
It's last day of the month, right?
Yeah, we should expect some end of month fixings, no?
Yeah, later today maybe. After by London's close.
Well, the previous quarter revision, the 0.3 percentage point downward revision was due to, let me check, revision to residential fixed investment, private inventory investment, and also the export that were partly offset by our revisions, not residential fixed investment before. And also government spending, some imports, and federal government spending.
Yeah, okay, after the first move, euro dollar still 111.30.
Yeah. They can rally, but at least they are not.
No, it's turning off this part. Let me check what people are talking.
Wages are up 0.6. Employment cost 0.6. No big surprises.
Yohay, usually the revisions are better, right? It's going higher, right?
I'm not so sure. I don't remember. I didn't check it out, and don't remember what happened last year. So I just know that they were annualized once a year. They're revised once a year.
The dollar then keeps grinding lower.
I'm looking for the inventory data. If most of the disappointment came from inventories, it's not bad news. Because when inventories fall, they tend to be replenished afterwards, the next quarter. But I don't see that.
Yeah, they say that's the acceleration in real GDP growth in the second quarter reflected an acceleration in PCD and upcome in export, and a small decrease in non-residential fixture, blah 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 blah, and then these were partly offset, by a larger decrease in private inventory investment.
Okay, that's a silver lining.
Anyway, they're waking up. Take a look at the charts.
Yeah. Woo-hoo.
Also, it's rallying, and large Japanese yen is pressuring. What I would not like at this time would be a dollar buying the pound dollar, because every time the pair has tried to move above 32 or higher, the fact is that it has been quickly being reversed by selling interest. So I guess that it's not my favorite pair to go against the greenback. Maybe the Aussie and the dollar Japanese yen are the first. And there we are. We still don't. What's that? We still need room to react. Someone screaming.
Yeah, Valeria, somebody's trying to sell it.
What?
Yeah, somebody's trying to sell something for you. He's screaming in the street.
Yeah.
I
Okay.
remember my days in Colombia when people was walking in the street trying to sell stuff. Okay, so what do we have
Uh-huh.
here?
Smaller weakness.
Yeah, dollar weakness, euro dollar highest.
There we go.
Okay.
103 and buy. Right,
Yeah.
there it is.
Oh, look at that jump in the gold.
Yeah. EOC is helping gold, it's helping dollar 20 are going. We have a high this week around 45. Yeah, 45.60 if I'm not wrong. So that would be the immediate resistance for gold. But as long as above that, Fibonacci returned to 33. For me, the gold has room to go.
Yeah. Dollar yen so far does not challenge the lows. The post Bank of Japan lows is 102.71, but it is down. Euro dollar. New Zealand dollar was rising quite nicely before the release,
Yeah.
I mean on the day, and now it's of course extending its gains almost 1%. All in all, a weaker US dollar.
Zero Hedge is remembering in Twitter that the Fed hiked interest rate in a quarter that had only 0.9% increase in GDP. So just like an interesting point to take in count.
Yeah, but let's look at updated rate hike expectations.
Yeah, please.
Let's see. Find that. Don't know if it's updated. Anyway, the data that we have now, 18% chance of a rate hike in
In
September.
September?
Markets are pricing in the hike. Maybe, well,
No.
in May 2017. I didn't know they have a meeting in May.
Pretty much what we were talking about.
Hey, there is only 39%. It's not a real odds.
Yeah, not really. Not before the date.
Yeah.
There's nothing else telling that, nothing that's telling us that the Fed can raise rates before the second quarter of 2017.
Yeah. Well, chances can move up and down. Anyways, if anybody was thinking about September, if there was, I mean, I did read some analysis. I think it was Barclays or others that were talking about September. I don't see it happening. Even if we have a good revision of GDP or anything, this doesn't look good.
Okay, we are almost closing the first 15 minutes candle. So let's check what will happen after that. It's Friday. What? Happy Friday.
Yay!
That's
Yeah.
really good news are good news. So how Friday is still Friday.
Yeah, it's Friday and it's summer.
Yeah. Well, for you, for me, it's winter. Really cold winter.
Yohay, what is happening now in Catalonia? I know that the independence movement. What's going on there now? It's like a cold right now, or they're warming up on something bigger. What?
Now, after a few months of internal discussions, we finally had the parliament voting to move forward with the disconnection law, and it was of course voted by for all the parties that support independence, but in the Catalan parliament here in Barcelona, and against the will of all the other parties. So that was more of a statement, but anyway, it defies the constitutional court, so it's a point of conflict. In the meantime, we finally have some movement in the aftermath of the Spanish elections. So the current Prime Minister, Mariano Rajoy, got the mandate from the king to try to form a new government, but it's unclear if he'll have any kind of majority. The other parties don't support him. So the political landscape in Spain remains complicated, but life goes on. It's the middle of the summer. Political debates are moving slowly. People are on vacation. The economy, as we've seen from data released today, keeps on moving forward. So, so far there are big political issues in Spain, but it doesn't affect the economy that much, at least not now. It's a story to both stories. The Spanish elections and Catalonia are, of course, serious stories, but for the impact of the euro, currently it's on the back burner. You never know when it's going to reach the forefront, like with Greece. It can be 2 years out of headlines and then boom. So it could happen with Spain, but at least for now, nothing is going on in terms of impact on the euro.
I know. Thank you, Yohay, for your clear vision. And we have a question here. Valeria, what are you thinking about the dollar Swiss franc?
The dollar CC, that will keep falling. I do believe that it will. It's a bit overextended, you know, and the risk of a correction is present. But I do believe that we can keep going down up to 97 or so before finding some partial bottom. Although if we break below this level, the decline can extend, particularly if the dollar remains weak across the board, as we are seeing right now. Markets are awakening, in fact, so I do believe that we can see further slides in there. Fresh highs for the euro, the Aussie, the yen, and the CAD post-event, right? We are getting, so there we are.
Okay, Yohay, I have changing of the field. I have a question for you. Is how do you read the CME report? Can you explain how do you read that? I know the Fed Watch. How you can identify where market is out, it's odding, you know, what a certain percentage of change for Fed to hike in September, except. Yeah. Can you explain how it works?
Well, the CME group calculates it using prices of bonds. So it shows sort of the short-term interest rates reflected in bonds, what the yields are for the next 3 months, the next 6 months, and things like that in bond markets. So, and this is how they calculate it. Anyway, I use these charts. I don't know, exactly how they're fully calculated, but these charts can be useful to see a market reaction. Bond markets are not always correct, of course. But when you see a change, when you see chances for rate hike falling, which is usually the case, being pushed back, we can it has a good correlation with the US dollar and with everything that's going on. So again, it's not a clear measure. There's also a survey of economists, surveys of economists by Bloomberg, by Reuters, which also tell us what the expectations are for a rate hike. But bond markets move more quickly, so it gives us some information. Again, for September, it's really clear, so it's only 2 options: to leave rates unchanged or to hike. 18% to hike. For December, for example, it's 56% to leave it unchanged, and then 37% to raise rates by 25 basis points, and a very, very low chance of raising them even more. So anyway, this is another way to look at what bond markets are telling us about the Federal Reserve. Again, take it with a grain of salt, and it changes, of course, all the time.
Oh, look at that. Okay, guys, what do you think to do a wrap up now and a summary of the session and just wrap?
Now that the market is waking.
Okay,
Yeah.
we can wait. We
No,
can wait for
we
another.
can't because I have a couple of things to do. So, okay, let's do the wrap up, please.
Okay, you're first, Valeria.
Okay, well, I do believe that the market came into the second quarter US GDP release with high expectations. 2.6 was a bit too much, but the result, the final reading of 1.2 was a big disappointment, really tepid growth in the country, which add to the bearish case of the greenback after the latest Fed meeting. So overall, we are all seeing, in fact, the dollar falling across the board. Commodity currencies are the one getting the most out of the data. Gold is lagging, but should rally also after this news. The Japanese yen has been also helped towards the downside by Bank of Japan earlier today. So overall, it seems like the greenback will keep on falling to end the week lower. Beware of some profit taking and some position fixing because this is the last trading day of the month. But I do see scope in the euro to test the 111.90 region. If we close the week close to that level, there's a good chance that the pair will rally farther next week. So I will be paying attention to today's close. Okay?
Yeah, go ahead.
Yeah, just one more thing. By the end of the day, when Wall Street turns soft light, Europe will release the stress test, the bank stress test. Sorry, it's a tongue riddle for me that. Anyway, so that could produce some gaps in the euro. Okay, in the weekly opening next Sunday. So beware of leaving positions open there. Just that.
And Valeria, there is a question from Gavin Do about the New Zealand dollar. Yeah, it's like a rallying right now in 0.7160. What is your take on New Zealand dollar?
Well, it's about dollar weakness, so the rally would probably extend, right? It's the greenback that's falling all across the board. We're getting higher highs in currencies, and I would expect it to keep on rallying, right? We have I was following this kind of round floor formation we get in the forward charts. This is for me a big neckline, a big lag in front, 71.20, and we just broke it, right? So I do believe that buy against this one could be an interesting bet right now.
Okay, thank you, Valeria. Okay, let's move to Yohay. Yohay, what happened today and what will happen in the next day?
Well, big disappointment, clear to see. It's the third consecutive quarter of sub 2% growth. 1.2 is bad. There are some silver linings, but it's still, I think it's more negative than positive. So personal consumption is okay. Exports are okay. The big falls came from government spending, which pushed the figure down, and last quarter it pushed it up, and also inventories. But it doesn't compensate for the very poor growth and for a third consecutive quarter. Of course, important to remember, we have revisions. This is only the first release, but it shows us there's not going to be any rate hike. I agree with Valeria. I think we could see some more US dollar weakness. Again, the stress tests in Europe make euro dollar not the favorite candidate because it's an unknown for later in the day. But dollar yen, after the disappointment, for example, I would say it's a better pair to trade the dollar weakness. And yeah, let's see if it also has another thing anecdotal. It can have political impact, weighing on Hillary Clinton after the Democrats completed their successful convention and helping Donald Trump with sort of his gloomy picture of the U.S. economy. This sort of serves as some kind of proof. So I think the next months will have growing impact of politics on the US dollar, and yeah, big surprise, big disappointment. That's bottom line.
Okay, thank you, Yohay. So, and we will see next week the BOE, the Bank of England, and also Northern Payrolls. Right? Okay,
Yeah.
guys. So,
With Bank of England, but I believe we are not going to be with you with the non-farm payroll, right?
yeah, no, yeah, in Bank of England, but Northern Payroll will be with Wayne McDonald.
Yeah, that's right.
Okay, guys, thank you very much. Let me check if we have more questions here. Okay, no, nothing at all. Thank you, Valeria, and enjoy your winter. Winter is coming. Winter is arrived.
Winter
And
is here.
yeah, and thank you, Yohei. Just remember that winter is always there, too. But in Barcelona, Barcelona is happy. Barcelona is a hot city. It's summer. Enjoy the beach.
Yeah.
Yeah, take a mojito or whatever you want.
Okay.
Okay, Friday. See you guys next week.
See you. Thank you, guys.
Thank you.
Always a pleasure. Bye-bye.
Bye-bye.
And yeah, and for all you guys that are in the chat, just remember that Dr. Sifaraman will have the review of his positioning just right now, and he will take conclusion of his strategies. Don't leave us, just refresh your page and you will be with us, well, with Dr. Sifaraman again. Bye-bye, peace, enjoy the life.